Hello everybody, it's September 3rd, 2022. We're going to take a look at Bitcoin's action here. Real quick, you're going to see my recording software because I'm away from my desktop. Alright, so first up, what I said on Monday. A couple different things. I said I thought we were dealing with this sort of jellyfish structure, this corrective structure right now, and it wasn't signaling a move to new lows probably, but basically we just went through these actually 4 scenarios which I wrote here, and I'll go over them again here on the chart. So nothing really has changed. It's been very, very choppy all week, so there's not too much to add to that, but let's just go through these various scenarios and we'll go from there. All right, so first up, let me try to get this into full screen. There we go. All right. I've been looking for a pullback in a corrective second wave since we hit the top at 25K. I was expecting a top somewhere in that region and looking for a second wave pullback. So this large green box here was the ideal place for that pullback to go. And if we're just using that, you can see obviously we're in that green box. However, it doesn't look like a complete correction yet. Meaning, we have sort of an A and a B wave, but the C wave doesn't quite look complete. It could be. The 618 could be like a very shallow C. We didn't even hit the 618 though, so it makes me think we're probably going to see lower. So really just the question is, was this our B wave or was it our wave 4 of A in the purple count, which I've been over? So we're between these two counts. Yellow 1 and 2 are the same, which you can see here and here. But then we get the differences. Yellow 3, 4, and 5 are all right here, whereas purple 3 is down here, purple 4 is there, and purple 5 is here. We still have not ruled that out as a possibility. So that is still looming there as a potential where I tried to make it clear with the boxes. Purple would hold this support right here and then would see a move up into this box before then heading further down, and it would basically just reset this yellow fib that I have right here. We would redo that yellow fib basically, and it would still signal a move down from there into the 18K area, possibly even lower. Or if we're already done, if the yellow count is correct, then that's our A wave, that's our B wave, and like I said, we're looking for the C wave down, and this action so far is not signaling a bottom is in. There's nothing productive about this action, so I do think we need to explore lower. How much lower is anybody's guess at this point. This, to me, is not a clear structure at all. Now, the danger that does remain is that instead of this being an ABC, this is actually a 1 and a 2, and this is what I was trying to explain with my jellyfish analogy. If we see this begin to form the bones of a more bearish structure, we need to be quite careful. And typically what we would see is a bounce at around the 618 of the fib extension, and then rejection at around the 382, and then we'd see acceleration downwards. So we've not seen that acceleration downwards yet, of course, but it is still possible. This could be turning into a more extended second wave where we're just getting an expanded flat correction like this before actually seeing that extension downwards. So we do need to remain on our guard. We don't, like I said, have a super bearish setup in place on the micro, and we don't have a bullish setup in place on the micro. All of this action is chop. It's not signaling a strong move in either direction, but essentially, I think it's safe to say once we break out of this range, which is like 20.5, and at the bottom we're at about 19.5. When we break out of that range, we're either going to the purple box and then down, or we're going to go to probably the 1.0 extension is a reasonable bet at a minimum 18K and possibly even down further. And the real question then is going to be how much further down does it go? If it holds within that C wave, acceptable C wave box down to even 17.3, that can be the end of the correction downwards. And yes, that would make a lower low versus the low we made back here, which was, I believe, 17.7. So the good news about that, I suppose, is if we get down to about 17.3 or so, and then makes a new low, and then we see a nice strong impulsive rebound up, that can actually give us a much better bottom than what we had before, because right now we have a diagonal structure off the bottom, and that's not really fantastic. The bearish alternative would see us go down to the 16K level though, as the next move. So any spot buys that I did, currently I'm mostly in cash, and at this point I'm short as well. In fact, I've shorted basically to cover the remainder of my spot position, anything that I had left. I sold them, most of it up here, and then during this bounce here, I sold all of my spot positions on everything essentially. I sold about 80%. And the remaining 20% I've been holding on to, but when we saw this move here, I decided to short in that region right there. And so that short is hedging against that remaining 20% that I have, and then some. So I am net short at this point. So whatever it decides to do is completely fine with me. And I'm sitting on a pile of cash that I can put in when it is appropriate to do so. I will likely begin putting some in around 18K, because worst case scenario, even if this breaks down hard, it should hit right about 16 and then give us a bounce up there to about 18 anyway. So if we see that happen, any buys that I did at the 18K region, I'll get out of. Because from there, we would then expect a move down to 14.8. And this then would actually break the longer term chart as well, and would likely signal a much longer bear market is in store. And any rallies that we get from here on out would probably be a good place to continue selling or shorting or whatever, signaling a very long bear market ahead of us. So we're going to hope that that's not the case. It's a lot easier to make money in a bull market, but as I said, I'm in cash and sitting on shorts now, so whatever it decides to do is fine. But I would certainly like that next leg up. As I said, far easier to make money in a bull market than the bear. So we'll just keep an eye on what happens when we break this range, and we'll go from there. Primary scenario, as I said, is probably lower in most scenarios. However, there is a very, very small chance that we've already struck the bottom. Now, if we have struck the bottom, let's just talk real quick about what we need to see. First off, the action so far has been absolute trash, so we do very likely need to make at least a nominally lower low. If we come down here, just below like 19.4 or so, just to take out all of the other lows, and then we see from that point a 5-wave rally that takes us through that purple box. This would be a strong indication that the bottom has already been struck. And that can take us back up to those highs. It could take us back up to 25K or so. But whenever that initial rally is done, we would then see a pullback, and that would then be the time to buy once again and the time to get a little bit more aggressive. So I don't think there's any need to FOMO or feel like, we're going to miss out on a move. There is always a pullback, and that would be the only way that I'd be comfortable putting a significant portion of my portfolio back in, is when that happens. Otherwise, I'll just be kind of exploring these lower levels, buying some down here, but doing it cautiously and waiting for that 5-wave move to form off the lows before I do anything more than that. All right, so I think that pretty much sums it up. So really, basically we're in the same position that we were in before, and we're just waiting for clarity. So we'll see what the weekend brings, and I'll talk to you all on Monday. I'm trying to get this to go back to my other screen. There we go. All right. So there you have it. I'll talk to you all on Monday, and we'll see where we are. All right. Good night.